Okay, I'll wait for the chat to come up because I'm sure Zephin's here. Zephin's gonna get alerted. Okay. I'll say good morning. Not going to look at the chat until after the podcast recording. Look. I'm starting out with your question. Okay, we're going to start the podcast now. Good morning. It is Wednesday, September 28th. It is 8:43. The Bank of England has just eased, and the market is going crazy. Santoli is on the screen, going nuts. But essentially, this is the equivalent of our federal bank easing rates, and you know, whatever you think about the central bank or Powell or whatever, it is going to be it moved markets by a big way. The bond market was broken in England. Britain buying bonds is the equivalent of adding liquidity, which adds inflation, and is the opposite of the rest of the world. So that's why CNBC's and news organizations over the next day will make such a big deal about it. Is their bond market was broken. I mean, that's the essential thing, and the futures were way down. We're talking about 250, 300 points on the Dow, almost 150 points on the S&P, I believe. It was just way down. Now you're up 200 points, 167 on the Dow. But it's going to be a volatile section. But I wanted to start it out with Zevin on YouTube asked me a question yesterday. And he said, hey, give me your top 5 long-term dividend plays. Dividend, I kind of explained it on YouTube yesterday. Dividends are a little bit disingenuous. There's tax implications on dividends this year because buybacks are going to be taxed at 1%. So companies may be more inclined to pay dividends than they were before. Before they were just interested in buying back their stock, taking off market cap. Now they might be a little bit more interested, but essentially, the top 5 dividend plays, dividends that I take are in the Spider, XLV, XLE, XL, whatever industry you want to, the consumer discretionary, which I think is XLT. I don't exactly know all of them, but those pay off a good dividend. They provide a good growth. Those are always great because they're low cost. MPLX, Exxon, Chevron. MPLX plays like an 8% dividend. Devon plays like a 7% dividend. But remember, those are stocks that are not investing in their business. They are paying shareholders for in despite of future growth. So the logic is if you pay a dividend, you won't necessarily grow your business, and so your stock price won't grow. So top 5 dividend players, it's probably more personal than I can get on this podcast because it's about the industry that you believe in, and find the top dividend in that industry. Now, to that extent, right now on YouTube, I'm showing this, and go to the live YouTube and you'll see it. I'm on Finviz, and what I said was, I went to their screener. I want very high dividend payers of greater than 10%. I want a 200-day moving average where the SMA is above the 200-day. And I want last earnings per share growth being positive. These are just kind of alphabetical order. So let's look at one, BSM. I'm going to go to a new one. We'll type this up. FinViz. And God, it's slow again. But we're going to pull this up. I'm going to look at some of these. BSM is the first one. Let's type in BSM. This is a Blackstone. Blackstone Minerals LP. You can look at their PE is 13.7. Their dividend is 10.81%. You're making a fortune. Performance year to date, 50% above. It's 10% below its 52-week high of $17. Now, let's go over here into TrendSpider, and we'll type in BSM, and it'll take a while to come up. Now, this isn't something, again, remember, these are probably in industries that are not growing. Kind of this, what is it, Blackstone Minerals? Minerals and commodities have gone through a resurgence this year, and they're up. But overall, it's not a good industry to invest in. You can see this big leg down here. There's the button hook right there. And with the commodity portion of September taking hold, it's gone down a significant amount. It's trading at $15.62. Like we talked about, BSM trades between $9.70 and $17.36 within a 52-week range. It's 60% above its 52-week low. The 52-week low, you're not even seeing it on this chart. But imagine if you bought this at 13, plus you're making a 10% dividend. Huge. Let's look at the next one. Grindrod Shipping. Grindrod Shipping. GRIN. And this is the reason why I'm doing this. This is a good way for you guys to try and find stocks to invest in and ask me questions. Go on, do your FinViz screener and try and find something that's good. Grindrod Shipping pays a 14% dividend. 2 on the PE. It is 17% below its 52-week high of $28. 86% above its 52-week low of $12. This is a company that shipping, an international shipping company, owns, charters, and operates a fleet of dry bulk carriers. There's been a lot of shipping companies that I've brought up on this. Alliance Global Partners has a buy at $32. That was just in August. Jefferies resumed their coverage in April, a buy of $26. It's trading at $23 right now. So let's go to the algorithm in TrendSpider. And again, if you're following on a podcast, go to my YouTube channel. The link is in the description. You can find it easily and look at today's live session. I'm showing you exactly what I'm looking at as far as charts, as far as FinViz goes. So you just got out with a 45% gain. This was one that back in July, it gave you a buy around $14, and it's been upward ever since. You got that button hook, you had this capitulation, it's kind of pointed its way down. But again, while you're enjoying this 40% gain, you got a 14.04% dividend yield. So go in, and again, all I did was go into the screener, dividend yield of higher than 10%, price above the 200-day. Remember, the 200-day is a long-term moving average. So you want something that long-term hasn't broken the 200-day. If you want to look at something that's under the 200-day but pays has a bounce opportunity and pays a 10% dividend, look at that. Look at their earnings per quarter as being positive because you don't want something that's losing money. So there's a good way to try and find something. I always say, and I said this many times on the podcast, do not listen to some idiot on the internet, just like you shouldn't listen to me. One of the, and don't listen to idiots. This is a good note that I wrote myself. I was listening to My First Millions podcast yesterday, and Sam brought it up. JP Morgan, it was recorded on the day that the Fed made their September decision. And you guys remember, we crashed on that day. JP Morgan, with their thousands of analysts, put out a note that said the Fed prediction would be either the best day ever or down 5%. And Sam and Sean were kind of making fun. Well, that's kind of moronic because, they put out these three scenarios. If it's 0.75, they thought the market was going to fly. Just completely fly. Well, it was 0.75. And what did we do? We completely crashed. So they're wrong. Just completely wrong. From a macro standpoint, Apple will be down today, a chance to buy. It just had a MACD cross up as well, I believe. Let's take a look. It is down 2% in the pre-market. I think it was down as much as 4% in the pre-market. But I forget which analyst put it out. They said that there is weak iPhone 14 demand, and so they will not be increasing their production. That is, by the way, it's a fairly hidden note, but it's just the standard models. The Pro models have demand, greater than expected demand, and the margins on the Pros are better. So who knows exactly what's going to happen, but we did have a MACD cross up and showing it on my screen here. 150, 175, and you're trading below that. Apple has a 38% chance of win, so there are chances of losses, but I don't particularly trade Apple, so I don't look at the algorithm. The algorithm actually outperforms the asset. You make 38% on your 26 positions over 1,000 candle. You only make 30% buying and holding. Again, that's with only a 38% win percentage. You lose 62% of the time. You gain 7.84% on average. Again, you can look. This was a big part of that 1,000 candles. This June 21st buy and the August 24th sell for a 24% gain. You've got quite a big notch there. I think you can get into Apple and be safe. That is one of my big ones. Other macro, and my note says this. You've seen the market over the past 2 days. It wants to rally. It rallies into the open. It never holds. That's not good news. That typically is a market that wants to go down. Doesn't necessarily have the news to go down, but if there's one more bit of bad news, we're going to go down. And they're talking about the bonds right now on CNBC, and it's not, the bonds in England. It's not a good sign. The thought is that there will be more of a flight to the dollar, which makes the dollar stronger, which again, any of those international companies makes their earnings weaker. And you see Apple yesterday announcing that they're going to raise the prices for currency devaluation. And so in overseas markets, they're going to take more of a share. They're going to charge more in the App Store. They're going to charge more for the phones, blah, blah, blah. So keep your UVIXY, SPXU, and SQQQ ready. Also SARK if the growth stocks get hit. Right now, the Dow is scheduled to open at 132 points up. I would expect to see it sell off in the afternoon. So keep those UVIXYs, and the VIX is at 33. It'll probably come down to 24 at some point in time. Santoli brought up a really good point. Equities went vertical as we hit 2%. And then they came back, vertical meaning down. So as the bond market hit 2%, we saw a sell-off. And then we saw it come back. When it hit 3%, same thing, huge leg down. That was June. And then we saw the summer rally come back. So here in September, we see it hit 4%, sold off. The question is whether it will come back. Have those ETFs, TQQQ, UPRO, and all of the other bull markets, have them ready. Oil is down at 78. It's up slightly today. God, it's going to go to 100. The reserves need to be refilled. China, it has the potential of reopening. All of those things will play on supply. So I think supply is going to greatly outweigh demand. The only reason it's down is because of the fears of recession. So let's talk about Goldman Sachs. You guys remember I brought up Goldman Sachs before. And I'm going to keep that one up. You know what? I'm going to go to this webpage. Goldman Sachs, it's trading below its book value again. We saw a huge influx into the financials as they traded around or below their book value. Goldman Sachs is one you can see even in FinViz. It's just not supported. It's going down. 291 is where it's at. I think it's at 296 pre-market. But let's take a look at the algorithm. I don't see a cross up anytime soon here. But with banks under the book value, I think you've got a good opportunity here. Again, remember this one traded all the way up to 360. And it's come down pretty hard. This one has been crazy. It's got these gaps up here that are unfilled. You are out of it. If I expand this MACD, you'll see there is no soon. That blue line doesn't look like it's about to cross up on that yellow line. It looks like it's going to continue to go down. The RSI is at 25. There is no reason for this one not to turn around. Again, under book value, I think Goldman Sachs is one that you can hang on to for a little while. Let's take a look at some of the... I want to move this down again. It's hard on this MacBook to actually look at all of this stuff. But let's take a look at Goldman Sachs. Their PE is 6.59. They pay a 3.43% dividend. Performance year to date, you're down 23%. So it's about the S&P. Let's take a look at Bank of America because that is Warren Buffett's favorite. Their PE is 9. They pay a 2.8% dividend. Their performance year to date, they're down 31%. So either Goldman Sachs has more to fall, but down 23%. This one is 38% below its 52-week high. It's 3% above its 52-week low. If we go back to Goldman Sachs, I think it's a little bit higher than its 52-week low. It's 4% above its 52-week low, 31% down below its 52-week high of 426. I think you can get this one in the 290 range, and I believe that that's their book value. See, $301.88. In banks, you want to trade on the book value, so I think it's a good opportunity there. Let's take a look at Bank of America. What their book value is. Their book value is $29.55, and it's trading at $30. By Goldman Sachs. I saw that today, and I said I gotta put some long-term money into Goldman Sachs. Okay, scans. This is crazy. The only scan that I have conviction on is Apple. Apple crossed up, like I said, it's at 150 is the cross up. It will probably get you out with a loss in this algorithm. It's trading at 148. I say buy that dip. Apple probably will come down. If you say you're looking to put $1,000 into Apple, buying some fractional shares, put $100 into it today. Put $200 into it today. Whatever you feel comfortable with. Do not put the $1,000 in today because there's a possibility and a likelihood that we are going down further. This is the only scan that I say today. Again, Microsoft yesterday, I told you to buy it. Google, I told you to buy some of it. But Apple, Microsoft, and Google, I think those are ones that you add to your long-term portfolio. CRM is one that came up in the algorithm as well as a cross-up. I think this one had one in the morning yesterday as well. Again, with all of this floundering and selling in the afternoon, you get kind of these multiple cross-up, cross-downs. You've got a ton of gaps above this. Let's shrink this down. 148.86 is the buy on this one. It is down to 146 in the afternoon in the pre-market. I'm not as conviction played on this one, and the reason I'm not conviction play on this one, we'll go back into FinViz. The reason CRM I am not a huge fan of, the PE is 278. So it's still got downside to go. In my mind, it has been beaten down. Year to date, let's see, it is down 41%. It is 52% below its 52-week high. It is 2.83% above its 52-week low, but I don't think that 52-week low is actually representative. I think it goes lower. And that's why I say Apple is the only one that I think is a good long-term buy here. The others you may trade, but my likelihood, in my opinion, the market's going down. It's just got to. So I would rather see you play the ETFs if you're actually trading, because I think those are easier to trade than these companies, because the companies could come out with news, could come out with a crazy forecast on earnings, because we are going to see those earnings forecasts come down, and that's going to hit stocks. Palantir, $7.63. It's trading right at that in the pre-market. That's a cross-up. Synopsys. This is one that came up on the scan for ARK funds. Synopsys is one of their holdings. And again, this is one that you could probably trade just based on the action. This is one that you can see some pretty significant. There's a gap up here between 333 and 341. The buy-in is 306. That MACD, you can see it clearly down here. It's just been hovering down for almost all of September. It just hasn't moved. It hasn't gone up. Means that there might be more downside to go. You just had that death cross of you're about to have the death cross of the 50-day under the 200. So that's one. O'Reilly Auto Parts, we brought this one up yesterday. O'Reilly is one that trade on the fixing of cars, used cars. The used car market has never been stronger. People need parts. People need to repair them. So O'Reilly Auto Parts is one. But I would be careful, because that downturn there, that button hook, that scares me specifically with the most recent get in, get out. But you can see this one too in September. The RSI has changed much more than Synopsys. But O'Reilly has had this little run up here in the RSI, but you didn't see a huge run up on the stock. You didn't see a huge run up on the MACD. So I would say be careful. This one, the purchase is, let's see, is it 694? Yeah, 694.59. It's trading at 693. It's a kind of a sketchy one in my mind, just because it's run up so much. Another one that's sketchy, but it had a cross up, is General Electric. This was a favorite of mine when I was a kid. And when I was a kid, I was talking about in my 20s. So some of you may be even younger than that one, but they've fallen on hard times. Clearly, you can see they're hit by currency issues. They're hit by badly run company. Financials are just horrible. You can see in September, it's been nothing but downside on the MACD. That's the only reason I would say it may be a good thing to get into this at 64. When we look at FinViz and we look at GE. Their PE is, remember that the PE of the S&P is somewhere in the neighborhood of, I think it's 16 or I think it's 18, 17, 18 right now. It's trading right at its average. The market wants to bring it down. You're 44% below your 52-week high, 7% above your 52-week low. The forward PE is 13. Still too high for this company. They're only paying a 0.5% dividend. It's nothing. I mean, it's the only reason I bring it up is it has its cross at 64. If you like GE, if you're in the medical field, and you use GE MRI machines or something of that sort, and you really believe in it, it's a good entry point in my opinion. I think there's better places to make your money here. And in energy, one that is interesting, but I don't recommend, is Hallador Energy. And it came up on my energy scan. It's the only MACD cross up in the energy sector from yesterday. Now, I will show you the chart first. The chart looks ugly. And it's got a buy-in at $5.51. The reason I bring this up also is see in September how that MACD kind of is trending down, but the RSI is kind of trending down. You're seeing it. That's that traditional button hook that you see in my algorithm at the bottom, which indicates that it might be going up. Now, here's my problem with this stock. And it comes from FinViz, and it comes from the description. First off, they're not making money. You can see that. They're just not making money. There is no dividend. They are 167% above their 52-week low of $2. They are 30% below their 52-week high of $7.95. Here's why I don't like this company. Go into the description. Hallador Energy Company, through its subsidiaries, engages in the production of steam coal in the state of Indiana for electric power generation industry. The company owns the Oaktown Mine 1 and Oaktown Mine 2 underground mines in Oaktown, Indiana, and Asen the Coal Mine located in Clay City, Indiana. It is also involved in gas exploration activities in Indiana. Hallador Energy Company was founded in 1949. You can see the analysts don't cover this. The last analyst was FB&R Company. Outperform. They moved their price target from $12 to $11. It's trading at $5.52. By the way, that last analyst was from March 15th, 2017. So I don't like this one. It was the only one that came up in the energy sector. There were several others that I thought just weren't even worthy of mentioning, but I wanted to bring that up. Be careful in today's market. Today's market is going to wind up probably down at the end of the day. That's my prediction. I predicted yesterday was the bounce day. I just don't see any good information coming from this market. The only reason you're seeing a bounce up when England does that is because traders somehow seem to think that the easing in England is going to expand to easing here in America. I don't see that. I don't see that happening. I think Powell has it kind of in his wheelhouse to just continue. Even in November, I don't see anything kind of changing that. I think he doesn't necessarily care about the markets per se. He wants to get inflation under control, and he wants to kill the job market in order to get inflation under control. Apple is down to 147. They're talking about the iPhone 14 production on CNBC. 147, load up. Again, if you have $1,000 that you want to put into Apple, buy at least $100 of it today at 147. And if you don't like Apple, you'll have the opportunity to sell that at 160. 147 to 160, that's almost a 10% move. But you'll absolutely have a chance to sell that at 160 at some point in time. Again, you want to add in a small portion just in case it goes down to 130, like in June. It goes down to 130s, buy another $100 worth. Until you get to that $1,000, keep adding up on the way down. and only do that in companies that are making money. Today, my only recommendation, and again, because I'm a tech investor, Apple, Microsoft, and Google are the only companies that I would actually do that with. Meta is Facebook is one. God, the valuation makes no sense whatsoever, but they're pouring so much money into the metaverse. Mark Zuckerberg is so kind of out of touch from a management perspective. He doesn't have Sheryl Sandberg there anymore. There are some issues with Facebook, and that's the problem, and why you probably don't want to go into that one as part of the FANG. But as far as Apple goes, I think Warren Buffett's probably loading up on it down here. He's got it overweighted in his index. I've got it overweighted in my portfolio. So, but that would be where I would say, in my opinion, with the VIX at 33, SVIXY might be a play. It doesn't move as much as UVIXY, but SVIXY might be a play. Remember to have the bear markets on today: SPXU, SQQQ, and SARK. If you think the market's going to go up, use the UPRO, use SPXL. You can use SOXL and XOSS. Those are on the chips. They are having a rough day as well. If you want to invest in biopharma, BIBB Biogen had a Alzheimer's drug where they showed promise on it. So that's a huge one today. I think it's up 30%. It's probably undervalued. Even at that, if their Alzheimer's drug is that good, probably still has more room to run. Again, in this market, I probably wouldn't put money into anything. I'm not necessarily trading anything. God, Microsoft's at 236. Microsoft at 236. That's just crazy to me. But I've got enough money in there. Okay, that does it for the podcast. I'm going to cut it early. It's about a half hour long today. I'm trying to keep it at 30 minutes or under. So if you have any questions, hit me up on Twitter. Remember, there's a support link. If you find any of this, I would ask you in this market, probably not to tip me. If I've made you money, you can tip me. If it's some of those inverse things that you've gotten, BOIL, KOLD, SPXU, SOX, SOSX, any of those. If you've gotten those, throw a tip my way. But otherwise, I will talk to you tomorrow. Let's hope that the Bank of England didn't just screw things up. Have a great day. Okay, share. Export song to disk. And export. Okay, now it's time for YouTube. Any questions? Thanks, Zephin. Hopefully, thanks. Be careful. Feeling we're going down. I don't know why I type in there. Okay, and hit the thumbs up, Zevin. You probably already did. And anybody else listening on YouTube? I gotta start doing Active Trader Pro as well. I just can't do it on this computer when I stream, because GarageBand, I like to record in GarageBand because it makes it sound better on the podcast. And, like I said, I've got thousands of listeners each day on the podcast. For some reason, they don't sign up to YouTube. It's been hard transitioning people from the podcast to YouTube. But hopefully they move over at some time. Isaiah. Woohoo! Hit that thumbs up, guys. I usually hit it afterwards. In fact, let's go. Yeah. Zephin, I would tend to agree with you. Take a look at the charts of even those. Go to FinViz and look at that stock screener. Look at these stocks. Let's look at the daily of this one. Look, by the way, look at all of I should go back. Did I just lose this? It's easy for me to recreate it if I did lose it. No, I didn't lose it. But take a look at energy, industrials, energy, basic materials. When I did this screener and I was looking at this, no matter what I chose, the very high dividends were all in industries that are shrinking. And that's not a good sign. That just means they're not investing. I'd say go with growth, 100%. I think at your age specifically, go with growth. Because, you know, take a look at, and if you want to do this, take a look at Tesla against... Tesla's interesting because it's the most volatile S&P stock, by far, most volatile S&P stock. The beta score on it is out of control. But when you look at it against a equal weighted ETF that weights stocks and bonds about equal, the 60-40 kind of portfolio, I forget the symbol. There is a symbol. You can Google it. Actually, let me Google it since I'm here. ETF 60-40 portfolio. Let's see what it comes up with. Get rid of all of the ads. Here we go. Let's take a look at this. And it's YouTube Live, so I can go on as long as I want. I'm not as worried at keeping it down like the podcast. So this is the typical 60-40 portfolio. VTI, VTI BND. So let's do this. CNBC.com. I like to use CNBC, and I'll probably show up right on the chart. So it's going to be a little bit messy. But let's take a look at Tesla. I like to use CNBC for my comparisons. Oh, and of course this thing is going to... Oh, I didn't want that. I hate looking at this, by the way. Apple stock dips. That's ridiculous. That's just a freaking clickbait right there. We'll look at Tesla and we'll compare that against what? VTI and BND. Actually, you know what? Let's see. Portfolio dividends, historical returns. See, I wanted there. I know there's a couple of ETFs out there that employ it completely, but let's look at VTI and BND because I think you'll see Tesla even through all of the volatility. Oh, is this done bouncing yet? I can quit. No, it's not done bouncing. Okay, so let's do comparison. VTI. Look at the year to date. Oh, it's still thinking. God, I gotta quit this. I quit GarageBand. GarageBand takes up so much resources on my computer that the web pages just go crazy. So VTI down 16% year to date. Tesla down 21%. But let's go out 5 years. That's where you're going to see. Look. VTI up 42%. Tesla up 1108. It's 5 years. So total stock market, it works for you. But in my mind, pick out some of those stocks because this is what's called a life-changing stock. Just keeps going up. Tesla's valuation makes no sense whatsoever. So hit the thumbs up. Listen to the podcast. Do whatever you guys need to do. I am out of here. I'm going to upload this podcast. Stefan, Isaiah, have a great day. Let me know if there's anything you guys need me to do. Hit me up in the either on Twitter, Instagram, or whatever. But Stefan, great question yesterday about dividends. Hopefully I got through to you that at some point in time in your life, dividends make sense. And specifically, dividends make sense as part of a portfolio, but not your main focus at your age. You can take chances at your age because you do have the, say you bought Apple at 180, last year at its high. I think it was in August. You have time to get back there. Doesn't matter. I think Apple, will prove to be a huge one. I don't know, Zephan. Man, I'm lazy. Probably when I get back to Atlanta. I think I'm heading back in the next couple of weeks. And I'll work on the program. I'll work on the newsletter. Those are two things. But I can't do it on my laptop. I probably should just buy a new laptop. It's a little bit more, a little bit better. I probably should be using this big TV screen in front of me too as a monitor. But the laptop can't handle that. It's 2015. So, but I'll probably do that later. And don't expect anything like life-changing on the program. It's just going to teach you kind of where to go, like Zip Trader Charlie, to learn when to buy and how to learn about confirmation and validation, and when to buy, when to sell, how to go to Investopedia to identify which indicators you want to use, how to use Active Trader Pro to day trade, things of that sort. It's not going to be huge, but it'll be enough that you'll understand how to grow. I should say that. It won't be guiding you and holding your hand, but it'll help you grow. So, okay.